Hey, good afternoon, everyone. This is Trader Tim from over at eminimine.com, doing a trade recap video for October 29th, 2020. Lots to cover today, so let's jump right in. First things first, on the daily chart, when we dip below a big bearish candle or a big bearish day, and then get a bit of a rally into the close, or at the very least close positive. We don't even really have to rally into the close, but we had the same thing back here, where big bearish candle down, and then we dipped below that candle's low. That's a pretty bullish sign, especially when we're back at a support level. So, um, being that we are down here at the 50%, we have I'm not necessarily going to draw a hard fib from highs to lows like this. What is probably more likely is going to be a variation or some form of triangle where we've got the high from up here, we have a lower high, and then here we have a low, and then this either today or, I, if we go up from here, that's going to obviously be the most bullish sign. If we dip below today's low tomorrow, that could really accelerate some of the selling, and it would be more of a, let's say we go lower and we put in more of a horizontal line like this. For a nice triangle, I'd like the low up here to be higher than this prior low by a decent margin. So if we draw something like that, we might get a bounce that looks like things are all fine and dandy here and then sell off again. The market feels like it's pricing in uncertainty following next week's election. And it makes sense with, the speculation that we probably won't have a definitive answer on who the next president here in the U.S. is going to be on Tuesday. And so we see that with the VIX here getting a pretty solid spike and even moving above the beginning of September swing high. We did sell off today, or dip a little bit here in the VIX, but still, up in the mid 30s. And so as we head into the weekend and then next week, if we can get a bounce, I'm going to look at that as an opportunity to put on a hedge for all of the gains that have been had here in 2020. And I wasn't able to get anything on up here. I was waiting a little bit for the market to go a little bit higher, and I just didn't put it on the 12th. I probably should have. We did have 4 gap days up, but if we do get a bounce and we do get a contraction in volatility, the gains have been so big in 2020. So spending a little bit more to ensure that you lock in those gains is totally worth it. So putting on a hedge, maybe not necessarily going to be at highs, but getting a hedge on a bounce, to me, is worth it to protect if we were to, come down and break the 61.8 and make a bigger sell-off, or just have more volatility into the end of the year. Those contracts, if you, get some put options when volatility is lower, even if we don't sell off hard, but just come back to this, mid 40s level vol, then you should have some nice gains to be had, even if you just, get in a position up here and then ride it back down to the 50% and then hang on to a contract or two just in case we go a bit lower. So having that insurance, in my view, is totally worth it. I closed out of the NTES trade. It was a bearish engulfing. The high was higher than the prior candle from 2 days ago. This is yesterday's candle. And the low yesterday was lower than the candle from 2 days ago. So I put my stop above yesterday's candle's high and was taken out today. And when you look at it, yes, it's in a downtrend, but for the market to be selling off pretty hard and this NTES not to be breaking lows, that's relatively bullish, and that's not what I want to see. On the flip side, the the long that I've got, BLFS, is acting very bullish compared to the broader market, which has been going down. It has been going up, so it's very much relatively strong. Um, and that's really it. Those are the two that I've got left as far as swing trading. Side note: has anyone been paying attention to Bitcoin? Because earlier this year, it was down below 4,000, and it's been hanging out up near the 13,000 mark for a little while, and been creeping up these last this last month or so. So for those that have been sitting on some or bought a little bit, you may want to look at ringing the register here. Not all of it, but a portion of it into the end of the year. Doesn't really do you any good to hang on to things and let them roll over all the way back to the price that you bought it at. But if you've got a couple of Bitcoin and you want to take off one or take off even a half just to lock in some gains to make sure that the money that you're working with is profits, just keep your eye on it, especially as we inch up towards the 15,000. Again, you don't have to catch the top, but on the last run up a couple years ago, I closed out a big chunk around 15,000. It ended up going up, 19 and change, but 15,000 from a 200 purchase price was pretty incredible. So I know there's a lot of folks that are kind of anti-crypto, but if you're not necessarily trading it, but just kind of buying and taking some off the table when it makes a big run, you can keep your risk asymmetrical and just be playing with some pretty nice gains. Let's see here, running down the list. Let's go to the intraday chart. So we talked about this triangle that could be setting up here on the daily chart, bullish bar today. Let's go to today's trades. Now, this has been, I've noticed in the last 3 weeks, a little bit higher frequency of stop outs that I've been seeing here in my trading. Let's clear everything, and we'll start from scratch on the day. Monday had a nice 20-point winner. Tuesday just had the one stop out in the room that we did live together. Yesterday, nice little 6-point run, and then another stop out, 4-point. If I adjust down for 2 contracts, and I have the log that I'm referencing here for those that are part of the VIPs. It's in the dashboard right at the top. I've got the swing trading log with my trades from there in the watch list, along with my day trades listed there. So you can kind of follow along a little bit easier if you want. And then today, so still up a good 15 points on the week. But again, I adjust things down for 2 contracts just to keep things even. If you're trading 4 or 6 or whatever, just take the numbers that I have, and then you can either double them or adjust to fit what you're trading to get an idea of, okay, that was a 4-point loser, that was a 20-point winner. Just to try and keep things as simple and as relatable as possible. I find it easier for those to view it that way. So let's run through today. At the open, let me pull this up here. So we had kind of that, we had no gap right at the open, and then sold off first 15 minutes, got the kind of 15-minute reversal as you oftentimes see, and we did have a low tick at lows. Right here, right at the about 13-minute mark, and then the way I drew it up, we had this little double bottom set up beautifully to here, pulled back, but it came 2 ticks away, and it did not get a fill. we came down to 54, and we really needed a 50, 53.50. But so I ended up adjusting my anchor point up and ended up doing the 54.75. It was taken out. In most cases, I would just leave it alone and just do, you know, the small retracement. It completed its target, and then just it came a tick or two away. If a trade comes a tick or two away from my entry, I'll just scrap it and move on. Since we had the low ticket lows, I wanted to see if I could get in, and I was able to get in, but just not hang on to that guy. And that's just kind of been, the last couple of weeks. Not necessarily even just because the volatility's increased today, but there's been a little bit of a shift from, like, if we go back to the daily chart, every dip was being bought, was the prior trend, and then on this leg in the last couple of weeks, every bounce has been sold. And so the morning session has acted a little bit differently. We had a couple of those Mondays, pretty much the last 3 Mondays have all had really big runners, and so it was a nice way to start the week. But then noticing a little more frequency of some stop outs in here, where typically this kind of a trade would get a nice run and keep you in. So that was right after, it was about 15 minutes in. And then the next one, if I mark the top and bottom of the first 30-minute range here, it looks, actually I'm just going to mark the top because we didn't go below it. Looks like that. And so at the top of the hour, 7:05, we had this high right before the top of the hour. It wasn't a high ticket highs, so I just left that alone rather than trying to take that short. But then this guy here at 7:05, 7:04, right there, 7:04, 7:04, high ticket highs, and so we came down, we broke the swing low. When I drew from high to low like this, it was a few ticks above the top of the first 30-minute range, but by and large it was pretty close. And I also had drawn up the full halfway back. So my thought was, okay, if you get short from 83s or thereabouts, you've got quite a bit of room, even if you only go to the halfway back point at 69. So lots of room to just make it there. You don't even have to go to the other end of the range. And this one traded down a good 5 points, completed the target. You draw up the next retracement then to trail your stop, and then that's where it got taken out. And then it did end up rolling over. Didn't quite make it all the way to that halfway back long. But again, that's kind of been the day, and in the last couple of weeks, you get a little bit more of these, initial drop, and then a little bit of a pop, knock some people out, and then roll back over. So here's that halfway back long. It did set up in a retracement like this that was fairly clean, but it really didn't take out a swing high, and so I let that one go. And then if we go just a little bit further to the completed its target and pulled back into the next retracement, right to the 50% retracement. This guy was a bummer. Nice touch on the 50, right at the top of the first 30-minute range, broke the swing high, dropped a long like that. It ended up running pretty good, but just came down and got ticked out of that one. So not a whole lot as far as strong trends that were playable, even though the overall trend for the day, by and large, until just right into the close, bit of a pullback. And if you keep in mind that there's a lot of days that there may not be a strong trend, but there's smaller trends within the day, you can really capitalize on those days. So even though the overall daily bar was not a strong trend, you can really capitalize on the smaller trends throughout the day. Then you have a day like today where you do have a pretty strong trend for most of the day, and there's just enough undulation that can kind of shake you out. So, by and large, a fine week. But a lot of that is predicated on catching, a runner or two, so that you can, easily have, you know, 2, 3 stop outs and not have it be a big deal. If you are constantly getting in and getting out and taking really small winners, you have to really increase your frequency of winners so that you can offset the losers, and it makes it a little more challenging to try and build up that winning percentage in order to offset the losers, versus if you can build up the average winner dollar amount, then you can get away with a much smaller winning percentage and be just fine. So if you do have questions, feel free to leave them in the comments below. And again, if you want to you know pull up any of these logs here, they're just, I do everything in Excel for the most part. You can do that over at emoneymind.com/VIP. Thanks everyone, and have a great weekend.